Hello, everybody. Welcome back to our Houston Market in Minutes with Tragela Speaks here with eXp Realty. I'm going to be covering quickly the market stats for last week ending on October 21st. And I am joined, excuse me, I am joined by my weekly guest and loan officer broker, Miss Denise Deloach. If you go ahead and introduce yourself to the people as they continue to get to know us.
Yes, Denise Deloach here, and I am serving the Texas area. And today I want to talk a little bit about some loan products. So we'll get into it a little bit later.
Nice. I'll go ahead and I'm going to quickly share my screen to go over the weekly snapshot from HAR, week 42, October 15th through October 21st. It looks like the new listings in the greater Houston area continue to exceed the 2023 levels. During this week ending October 21st, there was a 21.7% increase over the homes that were listed this time last year. Last week alone, there were 3,197 new homes added on the market for sale. Then pending homes that went under contract had a 7.4% increase over this same time last year, coming in at 1,899 homes under contract, a 21.2% of increase of off-market listings, where sellers withdrew more listings from the MLS during this week compared to last year.
What do you think that is what's causing that? Them pulling their properties off the market?
I'm not sure, but I do know for sure that there's like last week when I looked at the numbers, there's an increase of the days on market, of course, in comparison to years prior where homes were on the market for days to a week. There it was like 45 days or 45 to 50 days last week.
Okay.
Homes sitting on the market. There are a lot of homes that are having price decreases as well. So I think it's the buyers. Excuse me. And hopefully you could touch more on it, that with the interest rates, a lot of buyers are afraid. There's no
Mhm.
statistics that I can show about it. It's just what I know from the market. Or I'm not going to say afraid, the affordability
Okay.
at the
Okay.
moment. And what the way that buyers are seeing it. And
Yeah.
yeah, you know
Yeah.
what I'm saying? And you can
A
speak
buyer
on that.
perspective.
I'm sorry, go ahead.
I mean, yeah, because if they're still thinking about 4 or 5 years ago, what it was like to buy a house and the price of buying a house, then yes, compared to now, it is quite
Correct.
expensive. Okay.
Right. And it seems that the sellers, most of them are seeing what the market is saying, which they're unable to pay or just don't want to pay the prices of the home. So there are lots of decreases in prices um,
Mhm.
all over Houston. And I could pull up and show some if we have time. And there are a lot of sellers that even with the new rule of what it's always been that sellers don't have to pay the other agent, it's always been that, but
Mhm.
just more put out there and talked about now because of the NAR settlement. There are still sellers that are offering to help pay
Right. Okay.
or pay down on costs. And I'm sure that's helping a lot of buyers as well, but I believe they're coming off because they're not being sold in a timely manner that is expected. Being
Mhm.
45 to, a month and a half to 2 months that's sitting on the market. And depending on the reasons why the sellers may be selling too.
But that 45-day, that's pretty typical, right? In a normal market. That's normal. And
That's what
we're
I was about to say, because last week
okay.
that's what I did the video on. We're practically in a balanced market right now.
Okay.
And I don't know that consumers realize that this is what happens in a balanced market
Right.
compared to when it's a buyer's market or when it's
Or
a seller.
seller's market.
Oh yeah,
Yeah.
or when it's a seller's market. So it's in line from my perspective for being a balanced market. So
Okay. Okay. Okay.
And there was a 5.4% decrease in closings this same time last year. There were 1506 this time last year, and there were 1424 closings this week, last week. A 4.2% increase in showing. So people are still looking.
Yeah. Yeah.
They're
Okay.
still looking.
They're still
Everybody,
shopping.
yeah, they're still shopping around. And of course, the online har.com, everybody's buying begins online these days. It was
Yes.
a 10%. You see, it was a 4.2% increase in actual going out, getting out of the house and going to view the property. But there was a 10% increase in just viewing online.
Wow.
8,881,878 views online alone. And again, that's where all the shopping starts, by scrolling on the phone or the computer before they actually make the move to get out and do the actual showings. And
Okay.
about 7,856 open houses. And I think it was about the same last week as well.
Hmm.
Yeah.
But we don't have any reports like for how many people showed up to open houses, right?
No, the individual agents have those. Yeah,
Got
we
it.
supply those reports to the sellers, which help
Okay.
let them know what the market is saying about their home and the pricing and stuff like that. So whoever the listing agent is has that actual report.
Okay.
Yeah.
Okay. That makes sense. And I just thought about that as you were presenting that. I'm like, oh, that would be really good to know. Like, of all those 7,800 or so open houses, how many people were out there, looking?
Yeah.
Well, you touched on something as far as affordability. And so
Mhm.
today I wanted to expand on that. I have a young couple that are they're doing something that we hear about, but maybe we don't know all the details about it. And that is the USDA loan. And
Yeah.
what that is, it's a rural development loan. And
Okay.
so, when you think about that, you may initially think like, oh, I've got to live way out in the country. And, it's just, I have to have a little barn. I mean, depends on what you think about rural.
Yes.
But here's the truth about that. We, like you and we don't actually live in the city of Houston, but we live in the Houston Metroplex. And with that, what happens is all of these suburbs that are attached to Houston,
Mhm.
they have a suburb attached to them.
Mhm.
And those are areas many times that can apply for USDA loan. So if you're in an area that may be about an hour outside of the major city, the city limits, you may find that that property or that area qualifies for USDA loans. So why is it important, Denise? Why would I even want to consider a USDA loan? Well, it helps with the affordability issue. So one of the great features of the USDA loan is that it provides 100% financing, so you don't need a down payment at all.
Mhm.
Okay. So that's the first huge benefit right there. That could save a couple or family thousands of dollars. The next thing is the interest rates are competitive. So I'm not saying you're going to get 4%, but I am saying you're going to get a very competitive interest rate for this particular product. Another feature of it is flexible credit requirements. So with conventional loans, you need to have at least a 620 or better. But with this USDA loan, it's a government product. And so you don't necessarily have to have 620. That's good. But if
Mhm.
your credit score is a little bit lower than that, we can still work this loan for you. So you don't have to have perfect credit, but as long as you're showing a good history of, trying to repay people back, then that makes you a candidate for this product. The property needs to be, eligible for the loan. So that is a requirement. We will look at your debt to income ratios. And sometimes this can be a little bit more flexible than with a conventional loan. So conventional loans have very strict guidelines as far as the debt to income ratio, and the USDA loan is a little bit more relaxed.
Mm.
And then it has a reduced mortgage insurance monthly cost to it. So a lot of great features as part of this loan product. And I just wanted to highlight that today.
Great information and a great product. And I'm so glad that you made mention of the USDA loan because that brings to mind properties in cities like New Caney,
Yes.
Porter,
Uh-huh.
Fulshear.
Yes.
All of those cities are, like you're saying, a little ways away from the main city of Houston, but they still have, like you said, there are suburbs attached to Houston. Then those are suburbs attached to
The
those
suburbs.
suburbs. Yeah,
Yes.
and they still have that city feel. They
Yes.
still have because they still have all of the amenities. It's
Mm-hmm.
just a drive away from if you want to do something in the city, but all of your shopping and all of that is still all of those that it's still there in those cities. Like I
Yes.
live in Humble, right? And then there's Kingwood, and then
Mhm.
there's Porter and New Caney. It takes me from Humble maybe 20 minutes to get to
See?
New
And
Caney,
there's right there. Yeah.
and it still has all the major shopping centers, Targets, and everything right there that's available. And you can find properties in those cities. Those are the properties when you say the property must meet the qualifications.
Yes.
Yes. So you
Mhm.
don't have to go way out to
You
Cleveland,
know, yeah, yeah.
Cleveland
Right.
to
Right.
qualify for this USDA loan program.
Mhm.
Like most people think you have to go to the sticks where I'm from in the country.
Exactly. And it's not, no. And the funny thing is, like, where I am in Pearland, there is a suburb of Pearland called Rosharon and
Yes,
Iowa Colony. And I mean, 7 years ago, that was still USDA. And
right,
there are still some sections of it that are still qualified USDA.
right,
And Pearland has grown so big. I don't know. I mean, it's still a small city, but it's
right,
not never going to be big as Houston. But it's growing significantly.
right,
It's had a huge surge. So as we see these cities grow from maybe 15 to 20,000 to 100,000,
mhm,
yes, it is going to have some of those same amenities that you find in the larger cities,
right,
and it's not going to be as many people getting to them. So it's just it works. It can really work.
right. Is there a way that people can find out if a property qualifies? Because
They
the
can
other
reach out to
qualification,
me.
yeah, well, I'm sorry, I was talking.
Now
Again,
they can reach out to me if they have a property in mind. And so there is a tool that you can use online, or you can reach out to me if there's a property that you've been checking out and you want to see if it qualifies for USDA financing.
right, which would be great because the other qualifications seem very flexible and or relaxed, as you stated. It's really about finding that property that qualifies for the program, it seems.
Hmm.
And
Now, there are some income restrictions,
okay,
but I still feel like it's pretty generous as far as what income is allowed for it.
okay. And then they just reach out to you
Yes.
if they have any questions. Our
Yeah.
and if you don't reach out to Denise, you can reach out to me and I can forward you to her.
Hmm.
Our social media information is listed below. Contact information will be in the description as well. Or
Yeah. Just text me USDA and that'll help me know
yeah,
what you're looking for.
just text, email, send a bird flying with a letter that says
Smoke
USDA.
signals.
And she'll definitely reach out to you and answer any questions that you may have, just so you can be informed. Because there are several properties, like you're saying, people think you have to be way out. There are several properties on the outskirts that qualify, and all
Yes.
they need to do is give you a call just to verify that.
Mhm.
So that's our Houston market in minutes. Anything else that you'd like to add, Miss Deloach, and before we leave on our way out?
That's all for today.
All right. Thank you guys for joining us on this Monday for the Houston Market in Minutes, and we'll see you guys next week.
Bye.